Hello everyone, welcome to my channel. Today is 8th of April and we'll look into some of the active trades. So we'll start with Nifty. So last few days we saw Nifty when we drawing a trend line on Nifty tops, it's facing a resistance here, and we predicted then Nifty may come down from here to 17,550, which seems possible now in couple of days. It have already corrected from 18,095 and it came down till 17,620. We expecting further more correction somewhere till 17,560 or even lower, 17,510, and then that will be a decision point to see whether the trader want to take it up or come to bring it down. But yeah, the trade is still on the short side as of now. Okay, next example we'll take is SDFC Bank. SDFC AMC. This one came to my radar today only. So if you see, if you draw a trend line, it's already in this share is already into downtrend, continuously downtrend right from 3000 mark. Okay, and if we draw the trend line and then connect the tops, so we'll see it made a top of 2970 and then came down till 2200, lot of fall, tried to make another top here 2500 and again lot of fall, and then it came down almost below 2000 mark and again it's trying to make a new top, and then that's where the new top on the trend line. So that's where it was hitting the trend line for a few days here around last week, and then it broken the trend with a very good price action. So now now the direction looks to be up. So somewhere around 2200 or 2150, this becomes our buying point if share comes little bit, and then a short-term trader can keep a stop couple of percent below the trend line at that point of time. If you are a long-term trader, then you can keep a stop below this point, which is the previous low 1985. So you can reduce the stop loss few points from there, 1982 or 1980, if you are if you bought and for a long term basis and you don't want to hold on to it. But a fundamental SDFC AMC is a very good company, so that way one can hold on to it. But yeah, this trend will, if you are a short-term trader, you have to follow the trend and you have to see if the trend is getting over, or if the started trading below the trend line, then you should exit. So the next example we are going to take is SDFC Bank. Okay, we are into daily chart of nearly 9-month data on the SDFC Bank, and we saw here October last year, 18th October 21, it made a top of 1725, and then it was all the time in consolidation. From 1725 it was continuously on downtrend and it came even below 1300 mark, almost 400 point correction, a lot of correction in SDFC Bank. And after this merger news where SDFC Bank is taking over the SDFC Limited, it made a very quick movement and then made a top of 1722. Now it is interesting to see here, it's like a double top pattern. See, around 7-8 months it made a top of 1725, and this time when it went up with such a heavy volume, it did not penetrated that top. So it went till 1722, 3 point below the previous top, and started coming down, and it came down all the way till almost 1513 mark, which is nearly 50% retracement also of this particular rise. If you draw a line here, this rise is almost how much? This rise is almost 430 point of rise, nearly 430 point rise. So this is a 50% fall of this particular rise, which is nearly 50% retracement. So this is again a critical point for SDFC Bank. It will make a decision here. Now it have to go down, then it will break this, either it may break this line immediately 1507, or it may go to 1560 and then try to face this face resistance around 38.2% retracement and again come down. But other thing would be, this merger has been announced now, and there may be some good news also coming with the merger, and there might be some bad news also. So let's say whenever good news will come, the share will go up 3-5%, and whenever the bad news comes, they may come down by 3-5%. So one have to be trading cautiously, and if somebody holding on to long term, certainly it will be a good bank, and that can be hold, and the share may go up in long term. So if any bad news comes and let's say major fall comes toward again 13 or 1400 mark, then that is the time one can enter into delivery and hold on to it for a few months, and we should again see 1700 or even higher level. So that all those levels are possible, but yeah, it may take a year time by the time it again goes back to 1700 plus. Okay, so another example we are taking it, Indigo, and we see a different pattern here. It makes, anyone knows this pattern? Okay, this is called head and soldier pattern. So the share was going from here somewhere around 1600, 1650, and it went all the way till 2300, tried to make from there it faces resistance, came down, again went up towards 2380 and again came down, and then third time after it tried to made up and then again came till here 2285, which is nearly this point. So yeah, this looks like a head and this looks like two soldiers. So this particular pattern is called head and soldier pattern, and from there it make a massive fall, and it's broken the previous previous point where it started this upside movement here. Even this point it is broken. So it's not that easy to read these particular setups, but generally a trader, a smart trader who knows head and soldier, he will come here at this point of time and try to sort the market here. So this becomes a sorting point for somebody who trade, and keeping the couple of percent as a stop loss from the soldier. So let's say somebody is playing a head and soldier pattern here, so near to this point 2290. Okay, now it cannot be perfect 2290, so you have to understand it may be few percent here and there. So let's say 2283, only it's just half percent below the soldier mark. So somewhere here one can sort, and couple of percent from upside. So let's say somebody is sorting here at 22, let's say 2290 or 2280, then a couple of percent from there, so 2330 or 2350 becomes your stop loss. This becomes your stop loss. You don't need to go till head, this becomes your stop loss. So because if that broken this particular line and it start trading over this particular line, that simply means it has broken the head and soldier and the share is going to go up. But if you see the down, if you see the one have read it correctly, the downside of this particular one from here, which is around 2280 or 22 this mark, it came down all the way till 1550, 1560. So roughly near to a 600 plus point fall from this particular point, which is a lot of fall. And all one have to do is, if you go on in the trade direction correctly, all you have to do is only trail your stop loss to make the minimum losses once you start getting profit. Okay, now another example, this we already saw, but again repeating because it's just making some confirmation here. So Deepak Nitrate, it made first top here, then second top here, and then third top here. Now yesterday it made a top which is almost top, and then hit the top and came down. So if it start trading in this range for a few days, and then again it will be critical point or decision point. If it start going over this particular line, then like 2350 or 2370, then your line becomes a stop loss, or a couple of percent below line becomes a stop loss, and then we can trade it for a target of 2650. and if it doesn't even break this line and continuously comes down below this line, stays below this line for a week time, which is in this case now, then your 2400 becomes a stop loss. So a couple of percent from the line becomes your stop, and then you again trail it down for lower target. I think previous low, highly likely to test these low 2050, and then possibility of even 1820 or 1800 1850 mark. So that's how we trade this particular counter. Now another example, IEX. See first stop here, in October, then second top here in December, and then it made a lot of, it went to a big downtrend and again started making upside movement. So if this have to follow this particular pattern from this point of time, the high possibility is there that it can test up to 260 mark. Okay, on the basis of these two tops, if we are drawing a trend line, so the third tops comes somewhere around 260 mark. So there is a possibility the share may go up to 260 mark. Okay, and then whenever you are entering, you have to keep few percent as a stop loss. Or if you are entering here, let's say 230, so you can expect a target till 260. But if you are a trader, you have to keep 2 or 3% as a stop loss. There is no well-defined rule for stop loss, but you have to cut your losses. So 2%, 3%. If you are a delivery person, 5%, but not more than that if you are a short-term trader. So yeah, that's all for today, guys. Thank you.